Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm gonna bring you 5 stocks that I will really like to buy if the market pulls back a little bit, okay? So leave me a like if you find this video interesting and subscribe to the channel. And let's begin. So here we have the S&P 500. Overall, it looks like that briefly, just to have an idea where we are. We hit this resistance again, okay? We went up and now we are back down to the averages, to the moving averages, 11 and 22 period. And now it's trying to push back up again, but it's hitting this resistance. It's like 5 days, 6 days in a row that you see we hit that and we are rejected. So what does it mean? Well, it means that the market is not strong enough in those days to push higher, okay? And this is perfectly normal, okay? We can have a little bit of turbulence in the next few days. Remember that we have Q2 earnings coming, okay? We are very near, and it would be perfectly normal to have a little bit of pull back, okay, to hit this support, okay, and do a little bit of sideways like the kangaroo market, okay. Now I'm not saying that we are gonna have a crash like that, okay, like some clickbait and things like that they like to say, a huge stock market crash. No, but it is perfectly normal to have a little bit of pullback, a little bit of sideways and kangaroo markets, okay? We don't know if it's gonna happen, but it's very possible, okay? The markets, they don't go up in a straight line, okay? So what do? We have to be prepared. So that's why I'm bringing you today 5 stocks that I like, okay? Because if this happens, we are gonna look to buy more, okay? And I will be very happy to buy those companies. Remember that I always tell you, especially in these moments of uncertainties, never be 100% invested in the market, okay? Always keep some cash aside to try to exploit opportunities when they come, okay? So let's start with the list. The first stock in my list is, guys, Facebook, okay? Ticker symbol FB. This is a wonderful company with a very high potential, okay? The market cap is quite high, is around $700 billion, but this is a stock that, in my opinion, can go over the $1 trillion, okay? Right now, it's trading very near the fair price, and I did a detailed fundamental valuation of it. So here, go to check it out if you haven't already. I try to predict the earnings, and I try with a model to find a fair price, okay? And the company is always trying to improve itself, okay? Right now, not long time ago, they closed this business with Visa and for WhatsApp payments and all those things. Remember that in Facebook you have WhatsApp, you have Instagram, you have Facebook itself, it's a lot of stuff, okay? And it's very interesting. What I love about this company is the balance sheet, okay? Facebook, in my opinion, has the best balance sheet out there, okay? Better than Google, better than Apple, better than Microsoft, okay? You cannot beat Facebook because look at that. Current ratio, guys, it's 4.60, especially now that they don't have these kind of issues with the law anymore, okay? Lawsuits, all those things. In my opinion, Facebook, it's impossible to go bankrupt, okay? Very impossible. Look at the debt to equity ratio, very low. The ratios, okay? 4.60 as current and 4.18 as total. Absolutely insane. And what I love as well about Facebook are margins, okay? Gross margins almost 82%. It's huge. The operating margins 34% and the net margin 26%. Just to make you understand what I mean, Facebook at the end, look at the net income. It makes more money than Amazon, but even if the revenue at first are I don't know, 1/3, 1/4 of Amazon, okay? Look at that. 280 billion Amazon, 70 billion Facebook. But at the end, Facebook makes more than Amazon, okay? So I very, very, very like the stock. Wonderful company. And if the price pulls back a little bit near $200, I will be very happy to jump in and add some shares, okay? Now the next stock in the list is a value stock, okay? Delta Airlines, airline stock. Now you can say, well, why airlines? I don't like airlines. They are very bad now. They are going bankrupt and all those things. Okay, I believe you, which is an argument that makes sense at the moment, okay? Anyway, Delta Airlines is one of the main 4 US companies, and the balance sheet is not so bad as American Airlines, for example, okay? Now, of course, the airlines industry has always been an industry typical with high debt, okay? Because you have to buy all those equipments and it requires money. Anyway, US in 2020, I don't see a huge company like Delta Airlines in the airlines industry going bankrupt, okay? Because US needs companies to fly, okay? It's one of the most developed country in the world. And the fact that this pandemic now happened, it doesn't mean that US is not gonna fly anymore, okay? It absolutely doesn't make any sense. And a company like Delta, well, they will not let them down, okay? Another important stuff why I very like Delta, why I'm telling you that, is look at that, guys. For the first time after the pandemic, we hit 600,000 passengers per day, okay, in the TSA checkpoint document. And look at that, guys. Those numbers that no one is looking at them, but they are going up very, very fast. Just 2 months ago, we were below 100,000, and right now we have done more than 6x. Okay, and I'm very happy to see that, because this is the sign that US is actually fighting this thing, okay? And I'm from Europe, but I wish you all to get out of it as fast as possible, okay? So, and this is a very, very positive sign, okay? Those numbers are going up. It means that more people are flying, more people are traveling, and those companies, they are gonna stop to burn money if those things are going up, okay? Meaning that the risk of going bankrupt is gonna decrease substantially. Now, if you want to see a fundamental valuation, I did a video as well on Delta Airlines. The fair price is around $26, $27 per shares, okay? So it's basically, in my opinion, trading very near the fair price. If with another turbulence in Q2 earnings, all those things, if I'm gonna see the price push back down around $21, well, I'm gonna consider to add some more shares, okay? Bear in mind, I already own Delta Airlines. Another company that I would love to add more shares is Alibaba, guys. Alibaba, ticker symbol BABA. This stock is basically, as everyone knows, it's the Chinese Amazon, okay? Now, needless to say, this is an incredible growth company, okay? Alibaba is absolutely insane. Right now, they are living the issue that with this pandemic, well, it is normal that people are not seeing, let's say, China as they were seeing China before, okay? We know that because this is the point where these issues started. So right now, everyone is thinking again about that and say, well, probably they are questioning the globalization, they are questioning the country itself. Also with Donald Trump on those trade wars and things like that. And of course, this is hitting the stock, okay, a little bit. But anyway, in my opinion, Alibaba itself as a company, it's something that you cannot push it down because it's incredible. Also with the success of online businesses and Shopify, Alibaba is behind all of it, okay? And also with the cloud industry, the cloud business, Alibaba in China is the first of the list, and the growth in the last few years has been incredible. Look at that, guys. Look at these line in revenues, and they are predicted to go higher and at basically the same rate. And also earnings are increasing, okay? Looks like they are trying their best to increase the margins. In my opinion, the stock at this price is still a little bit undervalued, okay? Because the fair price for Alibaba, for me, it's around $240 per share, okay? So if with all this turbulence in the market, if it happens to have a pullback in the price of Alibaba around $200, I would be very, very happy to jump in and buy some shares, okay? This is something that, in my opinion, over the long run, you buy and forget, and you're gonna make money, okay? The next stock in the list is another value stock, MGM Resorts International, ticker symbol MGM. This is a casino stock, okay? It's below $10 billion as a market cap, and the beta, look at that, is 2.20, okay? Now, I did a fundamental valuation of it, so if you are interested, go to check it out, the video, where I explain in details about the company. What you have to remember is that usually in the industry of the casino industry, the revenues are very volatile, okay? And with that, we have a very volatile stock, especially in those moments, okay? But why I'm bringing you that? I'm bringing you that because I think that MGM Resorts is one, the MGM brand in general, is probably one of the main anthem of Las Vegas. Whenever we see a movie in Las Vegas, whenever you see a picture of Las Vegas, the first thing you see is the MGM brand in the building, okay? So I believe that Las Vegas Strip and all those things, they are going to be back in the next years. Las Vegas is going to be back Las Vegas again. I believe that, okay? I really believe in the US in general, okay, as a country. I don't think that this pandemic is gonna continue to stop them for a long time, okay? Absolutely not. In terms of the balance sheet, we have a current ratio for MGM of 2.89, which is very, very great right now, considering this problem. A 2.89 means that the company is not going to have financial problems right now, okay, because they have a lot more assets than liabilities in the short term, okay? And also the ratio in total is very, very promising. It looks like they have some debt, but when we deduct the cash, and they have a lot of cash, it turns out that the net debt to equity ratio is below 50%, okay? So for a casino industry with all those buildings and things like that is something acceptable, okay? Also, the revenues were increasing before this problem. And now, as I told you before, earnings. The real problem of this is margins, okay? Look at that. Look at this kangaroo shape of earnings, okay? Sometimes they are higher, sometimes they are lower. And this is why the stock is usually volatile. But anyway, if you jump in at a nice price, I think that over the long run, a rebound and a comeback of Las Vegas in general, and casinos and entertainment and things like that, well, you can make some money out of this stock, okay? Because as a value stock, I'm not expecting a growth, an incredible and exponential growth. But if with some turbulence right now, the price is gonna pull back a little bit, and you jump back in around $12 per share, which is basically very near the fair price of the stock, well, you can basically, why not? In the long run, it can go back where it was before the pandemic, okay? And even if it goes back very near to 26, $29, $30 per share, and you jump in around $12 where it's a hell of a profit, okay? The last stock in the list that I want to bring to you is Spotify Technology, okay? Ticker symbol SPOT. Now, this is the only stock in the list that it's not profitable yet, okay? It's not profitable yet. You know what I think about unprofitable businesses? I think that some of them can be great with a great potential, but you don't want to buy too much of them, okay? Especially in moments of uncertainties, because the prices are difficult to evaluate and you don't know whether the price in the stock market is correct or not, okay? Because it's simple, they don't make money, okay? So difficult to understand them fundamentally. Anyway, I did a fundamental valuation, very detailed. Go to check it out because it's very interesting, with a model that it's a user-based model. I tried to give a value to the already existing number of users for Spotify and the new users, okay? I tried to evaluate the business as a whole, and I explained you very nice the business, and it turns out that the stock is probably still a little bit undervalued, okay? They are pushing a lot on podcasts. We saw that the contract with Joe Rogan and Kim Kardashian, and they have the same chief financial officer of Netflix, okay? Because that dude worked for Netflix and now is working for Spotify, okay? We know how well it did with Netflix, so we can hope it's gonna do the same with Spotify, okay? The main problem for them is to fix the costs and to scale the business, okay? So to increase the margins. The growth of the number of subscribers is predicted to be around 25-30% in the next couple of years, which is a lot, okay? It's a lot. If they are able to scale the business and fix the costs, well, this stock can be very, very interesting over the long run, okay? We have a $45 billion company. If they're able to set things, financially speaking, in terms of margins, we can have a $100 billion company, also $120 billion company, in my opinion, okay? Because the business itself is very similar to Netflix. And Netflix is 180 billion, okay? So I will not be surprised to see Spotify around 100 billion. There is a condition to it, and this condition is that they have to become profitable. Go to check the video where I explain all the issues that they have and the valuation itself, okay? But overall, even if it's not profitable yet, I like this company, and I think it makes sense to exist also for the entire music industry, okay? Because they go to solve the problem of the illegal downloads. I think that was a disaster for the music industry itself. And they are solving the costs of physical production, okay? Like with writing CDs and making physical albums, okay, to sell in the physical shops. So they are lowering the costs, and they are reducing the illegal downloads of the music itself, okay? So even for the music industry itself, so for singers and producers, all those things, it makes sense to Spotify to exist, okay? It's not something, it's that middleman that makes everyone happy. Alright guys, so I hope you find this video interesting, and leave me a like, leave me a comment below, tell me if you own some of those stocks, okay? Have a wonderful day, subscribe to the channel, and see you in another video.